Tesla Q4 came out and the stock went down, plummeting. It's at a free fall right now. The question is, how far low will it go? And if you should buy or not. Personally, what I'm doing, as soon as it reached below 200, I've started to buy. Simple as that. And if you guys aren't following me on X, I don't know what you guys are doing. I post all my trades on X, whether I bought or sell. I mean, I haven't sold a single share since I started buying Tesla stocks. It's all buys. So if you guys aren't following me on X, it's a big mistake. You guys should follow me on X. But the question is, how low will Tesla stock go in the next 3 to 4 months? Personally, I don't care. I mean, if it goes lower, I'm going to buy more. But I'm in it for the long term. If you guys are a regular viewer of this channel, 2030 is the minimum. Is the minimum time frame that I have for Tesla stock. And for those who are looking to, I guess, capitalize and take advantage of the opportunity to see how low the stock's going to go, or if you're just curious to see how low it could potentially go, because obviously it's not facts, it's all speculation, well then let's get down to it. Smash that like button and hit subscribe if you haven't already, man. Let's go. So here's a Tesla stock price prediction chart. We're pretty much done the entire year of 2023. And if you guys want access to this chart, because it's all formulated, check the link over here in the Patreon. And so you have supported me and you guys get access to these awesome charts. It's actually multiple charts and there's a few coming very soon as well. New ones coming very soon. But here are all the things that has happened in Q4. 485,000 vehicle deliveries. It was a little bit less than that, 484,507 vehicles. That's how many vehicles that got delivered. Average selling price got dipped a little bit, even though I thought it's going to be a bit higher, but it did get dipped a little bit, which wasn't as aggressive as other quarters. So that was really good. Credits was lower than what I expected. So that was interesting. Services was the same as last quarter, but profits was less. So I have a question about this. Why was it exactly the same? Maybe a coincidence, but that's going to be interesting. Leasing was more than last quarter, which, I mean, I was like, okay, I thought it was going to be like in the low 400 millions, but we hit, $500 million here. And that's because of the SNXs, even though there was a less leasing compared to other quarters, but there were more SNXs sold. That was the reason why. We'll get the profits here as well. 16.6% in vehicle gross profits, which is really good. It's from all the down trend that we're going from Q1, Q2, Q3, finally Q4 is going back up. Same thing with the operating margin. Finally, we have bottom operating margin, and I did talk about it in this video, the good, bad, and the ugly of finally we have bottomed, and this is actually really good news alongside with the vehicle gross profits. The total gap gross margin, not yet, but I think this will follow suit in Q1. Energy was less than what I expected, but they did say is lumpy. Operating costs surprised me that it was less than Q3's. I thought it was going to be over like 2.75 billion, but below 2.4. This was actually really smart. Here's the interesting part, guys, that nobody saw coming, not even me. They got almost $5.9 billion. I don't have here like 5.7, 5.8. That's what it says in their statement of operations, but they got around $5.9 billion of deferred tax assets, which was really clever of them to put it in this quarter. And this has some implications, although it's not that big, but it does have some implications, and we'll get to that in a bit when we see what the stock price would be soon. But take a look at the net income gap of $8 billion because of that. If it wasn't because of the 5.7 billion, it would have been around like 2.2 billion in net income gap. In the non-gap, it was almost 2.5 billion. So nonetheless, it's still a little bit more than Q3 for sure, but this was a big surprise. The 5.9 billion in tax deferred assets. Sheesh moment. Now, what's also interesting here is, well, total revenue for the last 4 quarters, or the entire of 2023 did not reach 100 billion. So that was, everyone thought it was going to reach 100 billion. It did not. However, though, the net income for the last 4 quarters, 15 billion, all thanks to the 5.9 billion in tax deferred. If this was not the case, Tesla would have been below 10 billion in net income gap, which I would have been, that's what I was predicting. But Very smart of them. And something else here is the shares diluted actually went down. It didn't go up. So that was interesting to also see, but this does happen from time to time with Tesla. So with this massive $8 billion in net income gap, we get an EPS diluted gap of $2.27, which would be the EPS of this entire year that everyone's going to go based on, of $4.29. Now this is artificial. If we subtract $1.70, because that was the added on of 5.9 billion, the official one would be $2.60. This is the real number that we have to look at. But since this is the actual number that we have now because of the tax deferred assets, we have to go based on the $4.29. It's just how economics works, how stocks works. We have to go based on this. That means the PE does get compressed. That's how it works. It's going to get compressed. EPS non-GAAP 71 cents. It was a miss, but more than Q3, so that's decent, I guess. But let's see what the stock price would be based on this. And if you guys are ready, man, then why isn't that like button smashed? Come on, do you guys want to see how low this thing can go so you guys can plan? Obviously, you shouldn't plan because it's all speculation, but these are potential downs it can go. And I don't recommend timing the market, being time in the market. Always beats timing the market, and that's why I'm buying, regardless of people saying the stock's gonna go to $100, 100 flipping bucks. Again, I don't know. That's gonna be a hard. Something bad has to happen to Tesla in order for that to happen. But if we're getting interest rate cuts in like 6 months' time, I don't know, man. I would reconsider 100, maybe 150, but we'll get to that. Smash that like button so we can see it, man. All right, let's get down to it. At the moment, the stock is around $180 per share. That would mean a PE of around 40, around 45, around 42, around 42 with the EPS of $4.29. Now, if we go ahead and subtract $1.70, which is pretty much removing the 5.9 billion of tax deferred assets, that would mean a PE of around 70, which is what it is right now. So this would be, I think, a 70 PE, while Wall Street and institutions are thinking that there's not going to be that much growth in 2024, maybe too high for them. Unless they're thinking 2-3 years down the line or even more, then maybe 70 PE, okay, it could work. And if they're obviously not adding the FSD and the other things, then okay, 70 PE does make sense. But let's go back to $4.29 because this is what we're going to be seeing on Yahoo Finance and all the other things, the 42 PE. Most likely, if things continue to be, if the FUD comes and everyone brings their price targets down, then we could probably see a PE going as low as 35 PE, or if we subtract the $1.70, it would be closer to maybe like 60 PE of $150 per share. And I can see this. What I can't see is the PE going down to 23 to be a stock price of $99 per share. And if in order for this to happen, there has to be something bad that happens in the market, or especially to Tesla, that this happens. But again, looking 6 months down the line, I don't think there's that much of a negative coming. I think if anything, I do think there's going to be a soft landing, and I do think there's going to be a mini recession. But that follows up with a interest rate cut, and a lot of interest rate cuts. And when we have interest rate cuts, companies like Tesla, who is interest rate sensitive, are going to get a boost from it because now people can finance it, can lease it. And if there's demand coming back, Tesla can actually slowly increase prices, which is very bullish, extremely bullish. And don't forget, next year we have the next gen coming. So that's also extremely bullish and all that kind of stuff. So it's really hard to see a 23 PE unless we have something bad happening. Chicken Genius says 69 PE. That would mean, $69 per share. That would mean a PE of around 16 PE. If we go ahead and subtract $1.70, that would mean a PE of around like 28, which is like what we're going to get in a couple quarters. Not the stock price, not the stock price, but the EPS, because it's gonna, unless there's another tax deferred asset class that will come in, or if there's another part of Tesla's business that soars up and brings the EPS higher, I would expect my price target, guys, my EPS target of gap of 2024 is $3.70, about $1.10 more from what it is now. But anyways, to reach $69 per share, we would need a PE of around 27 or 26 and a half. Guys, ask yourself, do you think Tesla is gonna be a PE of 26? 27 PE with the high growth while they're printing about $10 to $15 billion a year? No, just does not make sense. But anyways, let's go ahead and go back to the $4, the actual number that's going to be presented in Yahoo Finance and all that. I do think a 35 PE we would see this. And although it's going to be looking very like, whoa, Tesla's going at a 35 PE, that's because of the EPS is at $4.29. Now, if there is good news coming, I could probably see the PE going back to a 50 around here, around the 215s. But right now the sentiment's really bad for Tesla. And even though the quarter was really good, I mean the quarter, again, I would give it a 7 out of 10. The quarter was pretty darn decent. But at the same time, when there's no guidance, and when Wall Street is not being spoon-fed, I guess you could say, they will compare it to other car companies. And with interest rates high from now to the next 2 to 3 months, maybe going as low as 35, maybe as low as 30, we can see this happening for Tesla stock. And if that happens, I mean, I'm not betting on it that this is going to happen or this is how low it's going to go, but I have started dollar cost averaging into Tesla, but heavier. And every time when it goes lower, it's going to be heavier and heavier. So I'm going to keep it at a 35 PE as the 150 as what will happen between now till April 20th. Again, the chances of this, if I want to give it a probability to it, maybe around 40-50% because the sentiment is really bad with Tesla. This all could change if we have a interest rate cut in March. Maybe it can go up to back to a 40, maybe even a 50. If there's an interest rate cut, but I don't think there will be. Maybe mid of 2024. And I do think by June or July, we may see the first little tiny cut. I know Canada is going to cut. They've already announced that they're going to cut. So, but for the US, I think it's going to be a bit later than March. I think maybe second half of 2024 would be, and that's always been my prediction that sometime after the second half of 2024, that there's going to be a cut. Now, what I want to show you guys is how 2024 is going to play out because I did adjust it a little bit. Here is my 2024 on a quarterly basis, and I'm still working on this, but this will also be available on Patreon as well, so you guys can see from now until 2026. I did bring down my estimates a little bit. For Q1 of 2024, just below 500,000 in deliveries because they have shut down the Giga Berlin for parts and the Red Sea crisis and all that kind of stuff. But I'm still going to adjust this because I want to see what China is going to produce and deliver in January of this year, which would be exactly a week from now. So that's what I want to see. But if you guys can see this, operating margin is at a steady increase. It's steady, but is in a steady increase going up in 2024, as well as the EPS is also going upwards. When I meant the EPS is not going to be $4.29 for the gap, is here. End of 2024 is going to be $3.04. But end of this year, we got $4.29. Why is that? Well, that's because if we subtract $1.70, it's $2.59. We are getting around $1, almost $1.10 on top. It did get lower because I did adjust it a little bit here. But nonetheless, this is the right number and it is more than Q4's. Now, maybe end of Q4 of 2024, they'll have another tax deferred asset, which nobody knows, or other stuff that's coming that we don't know. They're very clever on these things. So I'm going to be cutting this, and obviously when this gets lower, the PE goes higher. It's just compression, right? So my price target for 2024 is 350, and we would need a PE of 115 for that. Now, is that doable? Depends on how this year will be with interest rates and scaling and deliveries and price cuts and price increases. If you guys take note, since Q2, I am increasing prices slowly because of the Cybertruck ramp and all that kind of stuff. Everything else seems to be going up, which is really good and very positive. However, though, if the EPS does finish at $3.04 and a non-gap of 360 almost, which is more than this year, because again, 2024, I keep saying it's a recovery year for Tesla. It's not a year that's going to do records. That's reserved for 2025 and onwards. 2024, it's a recovery year. We would need 115 PE to be 350, which is a lot. Now, realistically, if the market is still not buying it and the compact car and Elon comes out and says it's another cash burner and Mexico comes and so many other things are coming in the way that Tesla needs to pay for, well, maybe a PE of maybe around 80 just to keep it flat. It's going to be flat, or maybe 100 max of $300 per share. I do think by end of this year, Tesla should be worth about $1 trillion, right? Or just close to $1 trillion, around 300. That's what I think. And when we look at it, 170, or sorry, if I go back to, what is it, 35, 150, or even 42 of 180 or what it is right now, 180 of now to 300 then, that's like almost a 40-50% growth. Will this happen? I don't know, but if we are getting growth in EPS like this, then I don't see the reason why it wouldn't happen. So that's my opinion, and that's what I think could happen. Majority of the time, if we look at the chart here, guys, in 2024, giving a 50 PE around these would be around the mid or low 200s. Now again, we do have to subtract maybe $1.70 here because of the Q4. That would mean a PE of around 70 or even 75. Now you guys be the judge. Is 80 PE or 85 PE high for Tesla in 2024? That's for you guys to judge. Personally, for me, if the operating margin has actually bottomed and everything else of this business has bottomed, then I think Tesla deserves to be in the high PEs of 70 to 80s because there's so many things happening with this company that's just hard to ignore and not be able to look forward towards it. Because Tesla, they're spending so much money on investments. Like think Amazon. Amazon has terrible earnings, but that's because they keep reinvesting majority of it back into the business. And because of that, they're going to bear fruit in the next few years or so once they start bearing fruit. And Tesla's doing the same thing. The amount of megapack factories, the amount of gigafactories around the world and the products they're doing is insane. And I wouldn't bet against that. So going back to this chart, what this here would be, I am saying around a 35 PE, maybe in the next month or two, not year or two, and next month or two would be the lowest of 150 until people realize that, okay, this is getting ridiculously cheap. Then I think they'll start buying. But that's the lowest I think it would be. Around 150, I think that would be the lowest. I could be wrong. Maybe the stock does go to 100. And if it does, I mean, I'm already buying as much as I can right now. If it goes to 100, I don't know. I may have to ask for a loan or something. I don't know. I'll definitely do call options for Tesla at that point if it goes down that low. Easy call options, but not financial advice. Just my opinion and what I think what I'll be comfortable doing around that prices. So that's what I think. $150 per share is the lowest I think it can go if things go really bad. 40 PE, 170s around there could also be the bottom, but again, all depends on sentiment, what people are feeling, and what the market really wants for Tesla to be valued at. Long term, all these, like this quarter, is one quarter that no one's gonna remember in a couple of years or so. The price target by 2030, or the price was going to be by 2030, when FSD is there, when the bot slowly comes out, when robotaxis and all that comes, and compact car and the Cybertruck is full force and energy is just insane. These stock prices, these quarters are not gonna matter, man. They're just not going to flip and matter. And here is my 2030 stock price prediction, revised up until 2030. So check it out, you won't be disappointed. Guys, get your I bought the dip t-shirt. I'm wearing one. Well, I'm wearing the Sheesh one right now. The Sheesh one is also available. So support me there, subscribe, and I shall see you guys in the next video. See ya.